A question that we sometimes get is, does it make sense to use a policy loan before my policy breaks even or in the first couple of years? And we always take a step back and say, the only reason a break even matters is if you're going to cash out your policy. Now, comparing break evens while you're going through the policy process might make sense because you might want one policy that might be more efficient in the short term versus long term. But once you have your policy, you're committing to a lifetime result. And remember, life insurance doesn't just give you life insurance benefit, but it gives you cash benefits. It gives you future cash flow benefits. It gives you all kinds of benefits that will be beneficial. It's not just like your cash value growth. We can't just look at that because it's a multidimensional asset. And so this is a question that we got, and really as a company, we take it two ways. We say, number one, does the activity that you're using your policy loan make sense? So if you're going to take out a policy loan, you're going to incur some type of control cost. It might be 5%, it might be 4%, it might be 3%. And you have to make sure that if you are paying interest to control the insurance company's money, you have to make sure that whatever activity you do, whether it's a real estate business, whether it's paying off debt, whether it's even going on vacation or buying a house or a car, you have to make sure that that activity is greater than the cost of capital that's allowing that activity to happen. And so that is one of the things that we coach around at BetterWealth, is to really make sure that that decision makes sense. But once that makes sense, it really doesn't matter if it's in the first year or in the 30th year. If you understand that life insurance is a lifetime benefit, and ultimately break even only matters if you cash out your policy. And so I gave another way to answer this in a Q&A that I'll also attach behind this video, just in case me saying it a different way is helpful. And I would love to hear your thoughts, and maybe you can comment below if you have additional questions around using your policy, or if the way that I answered makes sense.
I gather reaching break even and one being allowed to take funds out takes about 6 to 7 years. Is this advantageous for a child who will be going to college in 4 to 5 years and not be able to borrow for education?
I would say break even and having access to capital, two separate things. The only reason break even matters if you're going to cash out your policy. The fact of the matter is this: you get to put your money into a policy, and yes, in the first couple of years, maybe in the first 6 or 7 years, you don't have access to every dollar that you put in, but you are literally funding an asset that's going to work for you or your children, and for the next generation, the rest of your life, and gives you access to utilize capital while it's still working. So break even only matters if you cash it out, or the opportunity cost of not having money. But when it comes to college, there's a lot of people that are using their policy in the first 5-6 years. Even though their policy hasn't broke even, they understand that their money is going to be at work and is going to benefit them 30 years from now. But they're still tapping into some of the capital now because of how the contract's designed. Hey, I want to thank you so much for watching this video to the end. This video is on life insurance, and if you have more questions about life insurance, infinite banking, why you should overfund it, we have a link below that goes to our And Asset Vault. This is a free vault that gives you everything you need to know about life insurance. We have case studies, we have a calculator on there, we have a handbook, we have frequently asked questions, we go through a process. I have my masterclass on there. We literally want to be the one-stop shop for every life insurance decision. And so if you want to learn more, click the link below, and we look forward to educating and maybe opening your mind and eyes to the power of life insurance.